Yeah, well, welcome to class once again. We'll be looking at Module 3 from our course outline, Sustainability, Accounting, and Reporting. And by way of general overview, I did mention that sustainability, accounting, and reporting is also used interchangeably as environmental accounting, some call it green accounting. And whether they call it sustainability or environmental or green accounting, we are saying it involves the process of identifying, measuring, analyzing, and disclosing environmental, social, and governance information. The approach enables organizations to evaluate and manage their sustainability performance and communicate it to stakeholders. Now, it is about a new area to us, especially in Africa, and to be precise, in Nigeria, where other developed nations are conscious of their environment. As a matter of fact, as we go on in this lecture, you're going to see that already the International Financial Reporting Standard has also been packaged together to address this sustainability reporting. What we are saying is there is no individual, no company, or no nation operate in isolation. Every company operates in an environment. And when you operate in an environment, we talk of the ecosystem. You operate in an ecosystem, your activities affect your environment. For example, when we look at the customers, they constitute what we have in the environment. Now, apart from the customer, what you dispose from your organization, that is what we call waste resources or waste materials, when you just dump it in your environment, it affects the environment also, environmental pollution, as we have in case of Niger Delta, that we say oil spillage, then the oil sector, that when you extract the crude oil, there is an impact, there is a part that we are leaving behind that cause havoc, sometimes to their water. They've complained that environmental pollution, water pollution, air pollution. And I use this word, before we kill the goose that lays the golden egg, it is only reasonable for us as accountants to make attempt to account for what happened in our immediate environment, so that we will not chase only the customers away. It's not only chasing customers away, we will not also damage and destroy even the biological assets in the environment. If you remember very well, in our statement of financial position, especially for companies, if you see the non-current asset, among that non-current asset, we have what is called biological asset. Then even when you come to the current asset, we also have biological asset. So this biological asset is inclusive of plants and animals. So in sustainability accounting and reporting, what we are saying is that we want to make an assessment, we want to take an assessment of an organization impact on natural resources, the ecosystems, and climate change. And we look at metrics such as carbon footprint, energy consumption, waste management, and water usage. These are things we look at when we talk of sustainability accounting and reporting. Now, it is one thing for us to account for all this. It is a different ball game for us to now report it in our financial statement. And ladies and gentlemen, when we look at IFRS, I say IFRS 1, first time adoption of financial reporting standard, but when we look at IAS 1, presentation of financial statement, we may not have a specific report that we tag sustainability reporting the same way we have statement of comprehensive income, statement of financial position, statement of changes in equity, statement of cash flow, then the notes to the account. But what we are saying here in sustainability accounting and reporting is that companies are now admonished to report their activities as it affects their environment. That is the brief about sustainability accounting and reporting. Now, if we take it a little bit further, just last week, I think I spoke to some of us that I took the lecture from Istanbul, Turkey. The theme of the conference I organized in Istanbul, Turkey, environmental auditing and management systems. That was the theme. I have a group of professors and doctors from ABU Zaria who came for that conference. As a matter of fact, we organized that conference for them. And I said, before we can even talk of environmental auditing and management system, we need to first have in place environmental accounting and reporting. So it is when we have the accounting and the reporting that we'll now talk of the auditing aspect of it. Now let's see briefly from the screen there, say sustainability accounting and reporting. I think I've explained that one. The key elements, sustainability accounting and reporting include, see, number one, from the screen here, environmental aspect. And concerning the environmental aspect, we are saying it includes the assessment of an organization's impact on natural resources. For example, those who dig what we call, of course, in the petroleum industry, we have the upstream, we have the downstream. We know the upstream has to do with those who extract crude oil from the source, who extract crude oil from oil wells. And those one cause a lot of impact also in the environment. Then when we say downstream, we are talking of refinery, those who refine the petroleum product or they refine the crude oil, and we have all this gas, we call it gas here, or petrol, kerosene, gas, and the rest. So in environmental aspect, we want to see the impact of the organization's activity on natural resources, the ecosystem, and climate change. That is what we look at there. Then social aspects, we are saying elements, the elements of what? Sustainability accounting and reporting. We have the social aspect also, as we can see on the screen. And when we say social aspect here, this focus on the company's impact on social systems. It includes labor practices, community engagement, human rights, and health and safety standard. Social has to do with human being. And when you say human being, and we say in an ecosystem, we say we have both people you engage. Sometimes they will tell you, as part of your social responsibility, employ the people from within the community where a company operates. So we call it social system. And we are saying labor practices. What are the labor policy in that area? What are the labor policy? I've just mentioned an example. Now, okay, when you are engaging labor, how many of the indigenous occupant of that environment have you engaged? And we say community engagement, human rights, and health and safety standards. Then we have the third one, governance aspect. And in governance aspect, what we are saying here is that the policies of government and how an organization is administered and controlled using these policies. It includes board diversity, executive compensation, business ethics. That is where we have that in place, and compliance with laws. So when we say government aspect, we have rules and regulations that are put in place by government. So how much of these rules and regulations is the company operating in that environment adopt or apply? That's what we're saying governance aspect. Then we have the stakeholder engagement. The stakeholder engagement. Here we are saying sustainability reporting involves communicating with stakeholders. And we all know when we say stakeholders in a company or in a business, we are talking of investors, customers, employees, and the broader community. All are stakeholders. And we are saying here, what is the level of engagement of all these stakeholders. What are the information? Are you carrying the stakeholders along? We need a report on that. Now, another key element is the frameworks and standards. Frameworks and standards. And here we are saying several frameworks and standards guide sustainability accounting and reporting. We are going to see some of them shortly, the framework and standard guiding it, such as the Global Reporting Initiative. We have the GRI, the Sustainability Accounting Standard Board, to interest us to know that we already have a board. That's the name given to them, Sustainability Accounting Standards Board. And we have Task Force on Climate-Related Financial Disclosures, to mention but a few. That's another key aspect. Then we have integration with financial reporting. And here, when we say integration with financial reporting here, we are saying sustainability reporting is being integrated, that is being enshrined with financial reporting to provide what? A holistic view of a company's performance and long-term viability. Now, how do we put this when we say sustainability reporting? Even in the real self, when we say sustainability, what do we mean by sustainers? And you know, one of our principles in accounting is going concern. So how do you keep your environment healthy so that you will still remain in business? That is what we mean here by sustainability. That is in the long term, in the long run. The things you are benefiting from that environment wherein you operate, you don't damage them, you don't destroy them, or the impact your activities is having on that environment will not damage and cause havoc. That's all we are looking at here. So integration with financial reporting. In financial reporting, all we are trying to look at is we want to report performance, financial performance. And one definition of accounting, we say where what we call accounting is not expressible in monetary terms, it is not accounting. That can be bookkeeping, or that can be just counting. So it's not everything that is financial reporting or financial statement. Then how do we now incorporate sustainability reporting in financial reporting? We are going to see that later. There is a specific recommendation on how we report all this in our financial statement. The last aspect, continuous improvement. And here in continuous improvement, say sustainability accounting is not just about reporting, it's also about using the data collected to make informed decisions and continually improve sustainability practices. Now, one key area that we need to focus on when we say sustainability environment, if you have not gotten anything, what we are saying is every company operates in an environment, number one, or no company operates in isolation. We work around people, we work with people, and we work in an environment. And most times, our activities affect the environment wherein we work, either directly or indirectly. And since companies and businesses are formed and expected to be a going concern business, not to start business today and fold up tomorrow, you will need to be conscious of what you do within the environment, the ecosystem within which we operate. In accounting, this is not sufficient, for example, for me to be reporting, okay, this is the number of people I've engaged in the environment. This is the number of chairs we have supplied to them. This is the number of buildings we have donated to them. No, that is not accounting. Accounting has to do with expression of our activities in monetary terms. So once we're able to account for our activities as it affects the environment, and we are able to give financial value to them, that's what we're talking of financial reporting. That's what we are saying here. And when you say, okay, in this particular year, here is what we have spend as a company in order to sustain our existence in the particular environment. Here we look at the risk factor and some other factors. It will guide us on how to continue in business. It will guide our decision making. Remember, one of the definitions of accounting, when we look at the definition of accounting from the point of view of a system, they say accounting is an economic information system which deals with the transformation of economic data into information useful for decision making. It is past looking, present looking, and future looking. So that from the report, you are able to garner together in respect of your environment. You say, be able to know, this is where we are coming from last year. We invested in so much within the community where we operate. This is our position this year. Then it will guide us what will be the next thing to be done in the upcoming year. That is continuous improvement there. The next subheading we are going to look at from the screen, IFRS for sustainability reporting, International Financial Reporting Standard for sustainability reporting. Remember that earlier I said we already have in place the International Sustainability Board. There is a board that has been put in place to come up with standards that will address sustainability reporting. And you can see that International Financial Reporting Standard S1. And what that one address from the screen is general requirement for disclosure of sustainability-related financial information. And the objective of this standard is to require entities to disclose information about their sustainability-related risk and opportunities that is useful to investors in making economic decisions. Ladies and gentlemen, if we want to explain this, some investors are risk averse. They don't want to take risk. Or even if they want to take risk, they want to take calculated risk. Despite the fact that in financial management, we know the finance balance, the higher the risk, the higher the returns. But then some are risk takers. Some are risk averse. They don't want to. So somebody have millions or billions of pounds or dollars or euro they want to invest. And they have the information that the company wherein they want to invest their money is a company that face high risk, hostile community. That the community is very hostile, that from the past, they have record of these community people who feel aggrieved to just come overnight, come and set company ablaze. All manner of bomb like that. Dynamite. Every investor will think twice before investing in such a company. So these are the information we are expected to give when we talk of sustainability reporting. We look at the risk and we look at the opportunity. It's just like in SWOT analysis. It tells you strengths, weaknesses, opportunities, and threats. What are the risks faced by the company within that environment? Then what are the opportunities open? You do your assessment. And we see key components again for that IFRS S1, say governance, we mentioned that, how sustainability related risks and opportunities are governed and managed. Then strategy, the impact of sustainability related risks and opportunities on the entity strategy and business model. Then risk management, the processes used to identify, assess, and manage sustainability-related risk. What we are saying in risk management is not sufficient that, okay, we have identified the risk. But when we talk of risk management, you identify the risk, you assess the risk. Some risks are diversifiable, some are not diversifiable. Some risks are endogenous, some are exogenous. Some risks are controllable, some are uncontrollable. Some risks are market risk, and some are inflation risk. There are different types of risk. Once you do the assessment, then you see how to manage such risk. All these are contained in the sustainability reporting, because that one will inform the decision of potential investors, whether it is worth it to invest in the company or not. Then the last component for IFRS S1, metrics and targets. Here, metrics and targets is used to manage and measure sustainability related risks and opportunities. Then the second relevant standard is the IFRS S2, and that one focus on climate-related disclosures. Climate. Just earlier hours of this morning, I'm trying to see, there was a news I saw online that one, who is that governor? Is it a governor or the vice president? I don't think it's the vice, who tried to defend the insecurity going on in our country. And he said climate change is the reason for some of this insecurity we are experiencing in our nation. Climate change.
The
So
SGF,
in,
sir.
su-
Secretary to the
so in sustainability reporting, we also have that provision. Let me mute everybody here. So in sustainability reporting, that's IFRS S2, we have provision disclosure of climate-related activities. The objective of IFRS S2 to provide specific guidance on the disclosure of climate-related risks and opportunities, building on the recommendation of the Task Force on Climate-Related Financial Disclosures. And the key components, again, like we saw for IFRS S1, governance, strategy, risk management, metrics and targets. But when you look at the metrics and targets here, you are saying, okay, let's go to risk management. Saying processes for identifying, accessing, and managing climate-related risk. Can you see that? And when you compare this with the very first one, that is a general requirement for disclosure of sustainability-related financial information, manage sustainability-related risk. This one is specific to climate-related risk. And for the metrics and targets, IFRS S2 is saying metrics and target used to assess and manage climate-related risks and opportunities, including greenhouse gas emissions. Greenhouse. I've talked about green accounting earlier. When I say greenhouse gas emissions, I've also mentioned the impact of what organizations, especially those in oil and gas sector, the impact of what they emit, the carbon oxide, the impact of all this on their environment. Then still talking of IFRS for sustainability reporting, another key heading, very, very important, we look at is the integration. You say integration with financial reporting. Integration with financial reporting. Now, what are we talking about when we say integration with financial reporting? The International Sustainability Board standards are intended to be used alongside IFRS accounting standard. That's just the integration. This integration provides a comprehensive view of how sustainability issues affect an entity's financial position and performance. And we are not surprised that we need to integrate this into our financial reporting. You know, when we say financial reporting, two things involved: the financial performance, another word we use for that, statement of comprehensive income in private companies. It is when we come to public sector, we call it statement of financial performance. And what is the end product of the statement of comprehensive income? To report profit or loss at the end of the period. And what is the end product of the statement of financial position? It is to tell us our obligations to outsiders and to also tell us what the organization hold or what outsider hold. Actually, the statement of financial position is a statement that depicts what I call what is owned by stakeholders and what is owed to outsiders. That's why we say accounting equation is assets, we say must be equal to what? Capital plus liabilities. Put in another way, ownership must be equal to ownership. Now, if you know you are mandated to report to stakeholders and still the resources of these stakeholders, you use it to address anything related to your immediate environment in order to ensure that you continue in business. That thing will affect your statement of financial performance, and of course, it will affect the statement of financial position. So it has to be reported. That's the integration now. That is integration. Remember, I've told us IFRS 1 or IAS 1 has no provision for anything as sustainability reporting. We've identified the 4 key statements we are expected to prepare. But then, the best global practice now is for companies, corporate organizations to disclose their sustainability activities. Then we have the second point there, development and adoption. In development and adoption, what we are saying here is there is need for consultations with stakeholders, including investors, regulators, companies, and other standard setting bodies to ensure the standard meets global needs. That's what development and adoption. Are you aware that even as we are talking today, United States is yet to adopt IFRS? As a matter of fact, some few clients here were privileged to prepare their financial report. We prepare financial report for some clients here in the US. It's still GAAP they use. It's still GAAP they use, generally accepted accounting principles. And we look at that, one of their reasons they believe GAAP is so deep and vast and is addressing their situation. GAAP is over, when you pick that generally accepted accounting principle, it's over 20,000 pages. But when you pick IFRS, except now that we have some latest IFRS that have been added, but before now, it's just over 2,000 pages. That's the volume of the book. So in order for sustainability reporting to gain general acceptability, what we are saying is there has to be consultation with stakeholders, including investors, regulators, companies, and other standard setting body to ensure the standard meets global needs. Once it meets global needs, then everybody will adopt it. And the last subheading we are going to see here is benefits before we look at illustrative case study. When we say benefits here, as you can see, number one, we say enhance investor decision making. And by this, we are saying it provides investors with consistent, comparable, and reliable information on sustainability-related risks and opportunities. You have your money, hard-earned money, or whichever way you've gotten the money and you want to invest. I've mentioned this earlier, and you realize that the location wherein the company is volatile, high risk. And I've told us about some environment that the communities, the people in the environment, very aggressive, not friendly. A right-thinking investor will not want to take that risk. We don't want to take that risk. And how will the person be aware that this and this is happening, or this is a report about the environment wherein the company is located, is through the sustainability reporting that will know about that information. Because financial statement on its own, as prescribed by IFRS or IAS 1 to be specific, will not tell you about the environment. They may not mention anything that, but with sustainability reporting, you will see the risk assessment and you will be able to take a decision whether to go ahead or not. Another advantage or benefit of it, global consistency. I will say this facilitates the global adoption of sustainability reporting standards, reducing the burden on multinational companies and enhancing comparability. We are still going back to the objectives of IFRS adoption. Remember, we've mentioned in our class that three major objectives for the adoption of IFRS. We say number one, accountability. Number two, transparency. And number three, we say comparability. If we have multinational companies who have their head office in United Kingdom, they also have office in United States, and they have office also in Nigeria. Let me use that as an example now. And that multinational company disclose information about their environment, that sustainability report, they disclose it. The one in UK discloses their own, the one in US disclose, the one in Nigeria disclose. And all stakeholders, every other standard setting body, and every other multinational companies across the globe have come to realize that this information is really helpful for their business. There won't be any reason, for example, while an accountant who prepares such a report in Nigeria will now come to US and they will ask you, go and write the professional examination or go and do one special training before you are engaged to prepare sustainability reporting for the company. That's what we are saying. Comparability will also mean that if I pick the financial statement of the head office in UK, I compare it with the financial statement of the multinational company office in US, and I compare it with that of Nigeria, there will be consistency. There will be basis of comparison among all these three locations because they all adopt the IFRS standard on sustainability reporting. That's what we're saying there. Then the last benefit here, we say improve corporate governance. This encourages companies to improve their governance and management of sustainability-related risk and opportunities. Before we look at the illustrative case study, time for comment and questions. Let me allow us. You have the floor. You can unmute yourself if you have some questions. All right. While we're waiting for your comment and questions, let's see from the screen here, illustrative case study on sustainability reporting. It's good for us to have a mental picture. It's good for us to have a mental picture, an idea of how this report look like. That's what I'm just showing us now. That this can come as, of course, notes to the financial statement. We form part of the notes to the financial statement. And for this particular scenario we are looking at, see it here. When you say scenario, eco-friendly incorporated sustainability accounting and reporting case study. That's the company background. Name. The name stated there, industry, renewable energy, operations, manufacturing and distribution of solar panels. Now, in sustainability reporting, please take note of this. We are expected to make financial assumptions. I'm going to explain that further. We are expected to make assumptions. Remember, this is just a case study. Revenue, see $100 million. We say increased by 20% due to market demand for renewable energy. Financial assumption. Then cost of goods sold, $60 million, reduced by 10% due to efficient resource utilization. Research and development, $5 million, focus on sustainable technology. Then operational expenses, $20 million, includes $2 million for sustainability initiatives. If I want to address this, what is the relevance of this financial assumption? Since we are talking of illustrative case study, what we are trying to say is sustainability has effect. That is, your environment directly and indirectly has effect on your revenue. It also has effect on your cost of goods sold and whatever you invest in the environment, of course, research and development. It depends on how you treat it now. R&D, research and development, sometimes you debit to profit or loss, and sometimes you capitalize it. The operational expenses, can you see that? Even when we pick 20 million now, includes $2 million for sustainability initiatives. We are reporting all this. Now let's go to the sustainability reporting. If you remember the elements, maybe I should go back to those elements we mentioned. Key components. Key elements including environmental aspect, social aspect, and so on. Let's now go to the illustration. Can you see what we are saying here? In writing or developing your sustainability reporting, see the first thing identified there, environmental impact. You are expected to report the impact, your activity, not just report impact, you quantify it. Accounting is not only qualitative or descriptive, it is quantitative. See, for environmental impact, for example, reduction in carbon dioxide emissions by 30,000 tons due to solar panel usage. Can you see a company that is conscious of what their activities is causing to the environment? Opposite the office I'm taking this presentation in the US, we have a bank, JP Morgan Chase Bank. Despite the fact that for the past 1 year or 1.5 years, as far as I'm concerned, here in Louisiana State in the US, there has not been power failure for 1 second in this state. At least, except for about 4 weeks or 5 weeks ago, I came to Nigeria. I've been here, I think I came January 19, and I just traveled April. So for that 1 year, 3 months, no power failure for 1 second. But despite the fact that they did not experience power failure, if you look at the bank, JP Morgan Chase Bank, they have this solar panel. They have this solar panel. You will see all their zinc, very white solar panel there. That they don't need to say generator as an alternative source of energy, solar panel, where we have generator as an alternative source of energy supply. Of course, you'll be polluting the air, polluting people. So they are saying as a result of this alternative use, of course, the solar panel, there's reduction by 30,000 tons. They quantify it. Then number 2, under environmental impact, implementation of recycling program for solar panel material, reducing waste by 40%. Recycling program. Some of us who have traveled before to UK or some other developed country, have you wondered why when you go to supermarkets, most of them will give you paper bag, not leather, paper bag, because they know easily when you are giving paper, before you know it, water touch that one, easily that one, natural waste like that. But again, when you now have the leather, what we call leather bag, we call it bag here, nylon bag, that one, they need to be recycled. They need to be recycled. That's what we are seeing here. All these things cause environmental pollution. We are expected to report this under environmental impact. Then social responsibility, that's another heading we want to report. See what we have in this case study. Partnership with local communities to provide renewable energy solutions. Partner with them. The employee training programs focus on sustainable practices. Employee. That is the training you give to employees. Then your activities also with the local communities, all channel towards renewable energy solutions. That instead of polluting the environment, you have alternative source of energy supply. Then we come to economic performance. Here we say increase revenue and market share due to sustainable business practices. If you operate in a friendly environment, this will affect your revenue. That's just the meaning interpretation of this. Increase revenue and market share due to sustainable business practices. Then under still economic performance with long-term cost savings through efficient resource usage and waste reduction. When you reduce waste. Is it in Japan that they will tell you the slogan? I say, do it, yeah, Japan. Do it right, just in time. Do it right for the first time and at all times. They want to reduce waste. If wastage cannot be reduced, if wastage cannot be eliminated, it should be reduced. Then we have governance. And for governance, we say formation of a sustainability committee within the board of directors. Now, still continuation, we are talking of illustrative presentation on sustainability reporting. See what we have done here. Graphical representation, you can either use pie chart, bar graph, line graph, pictorial representation of your activity. And to illustrate this case study effectively, eco-friendly corporate financial and sustainable practice can be presented through various graphical elements. Infographics, chart and graph, sustainability icons and visual element. And finally, let's go. See the graph here. Can you see it here now? We have the case study eco-friendly. That is, we now want to pictorially represent what has been done. We have the sustainability investment, long economic benefits. Here we have like bar graph. You can see like histogram that is now explaining. And what we are saying is when you are preparing your reports and you have figures, I've told us quantitative figures. You can't just say you have assisted the immediate community where you operate. You should be able to tell us how much have you invested. And you should be able to also quantify as a result of investing $2 million on your immediate community, this is what we now gain by way of revenue. And once your revenue is affected, then your net profit is also affected. And it will not be just for a year. That is what we see in the graph here. Ladies and gentlemen, that is the summary of sustainability reporting. And I have a practice question that will share with us. I want us to go attempt the practice question. If necessity necessitates, when we now meet, we can look at it together. You are not submitting it. Your own is to go and look at it. This is a practice question based on that illustration. And let me read it. Background: ABC Company, a beverage manufacturer, has launched a sustainable packaging initiative. The company aims to reduce its carbon footprint. Can you see? So in sustainability reporting, all the company is expected to focus on is to reduce or even eliminate the damage or the impact the activities is having on their ecosystem, their environment. So the company aims to reduce its carbon footprint by using 50% recycled materials in its packaging. The initiative also involves partnering with local recycling programs to improve recycling rates. Financial assumptions. You know, we made those assumptions earlier in the illustration we just saw. Current annual cost of packaging, $5 million. Expected increase in cost due to sustainable packaging, 20%. Projected savings from reduced waste disposal fees, 10% annually. Initial investment in local recycling programs, $500,000. Initial investment in local recycling programs. Okay. Anticipated increase in sales due to positive market response, 5% required. Prepare a sustainability accounting report for ABC company, taking into account the financial assumptions. 2, evaluate the impact of the sustainability packaging initiative on the company's financials over a 5-year period. Then the third one, discuss how this initiative contributes to the company's sustainability goals and how it might affect the company's reputation and market position. If you don't have your own question you want to ask or comment, I want to hear comments about this practice question I'm giving to us. How do we go about this? Let's begin to discuss it. Anybody with idea? We have the financial assumptions. Then when we pick the first question, prepare a sustainability accounting report for ABC company, taking into account the financial assumptions. That one should be straightforward because check the illustration. See the illustrative case study here. Financial assumption will be stated, then your sustainability reporting, environmental impact, social responsibility, economic performance, and governance. I've given you a practice question. I'm already giving us the guide on how to go about it. So that very first aspect, the financial assumption may not really involve calculation based on what's I've just shown to us in the illustration. But the second part is the main work. Evaluate the impact of the sustainable packaging initiative on the company financials over a 5-year period. All right. I rest my case here. The floor is open for questions. There's no question, right? No question, no comment.
There's questions, sir.
Go ahead. Introduce yourself.
My name is Evelyn Jacob.
I think again, it's me that will be taking the attendance now from my system here. It's very, very important. Attendance. Very, very important. Let's know those who attend this virtual class. Go ahead, Madam Evelyn.
Preparing the question you gave us from the illustration, are we to do the pictorial or the...
No. You don't have to.
Yes,
huh? You don't have to. Now, one of the reasons, sometime in financial reporting, why people go and express some aspect of financial statement. You know, if you have 5-year financial summary, it's just a question of you knowing how to use your tools, IT tools. I think it's one of the topics we have here, how to prepare financial reports in digital tools, how to use digital tools. Once you have, for example, your 5-year financial summary, and you want to use Microsoft Excel or spreadsheet easily, you can have all these things depicted. You need to have the data first for you to now say, I want it to be put in pictorial or graphical format. Excel is not the only one they use there. There is a software. If we have time, I will demonstrate that one practically. We'll see it, called IDEA. IDEA is the acronym for Interactive Data Extraction and Analysis. It's actually an audit software, but it's not only for purpose of collecting sufficient, reliable, and dependable evidence to form an opinion. IDEA is also used for purpose of analysis. And IDEA, that's audit software, also has provision. Once you have your data for the number of years and you key in the data, automatically you select, is it bar graph you want? Is it pie chart? Is it histogram? Is it archive? And so on. And I said one of the reasons why companies now disclose this using graph or pictorial representation, we have some stakeholders there. Until they see it, not only stakeholder, even some top management until they see it in graphical form, there may not be much understanding. So, but for this assignment, it's a no. You don't need to do this. Any other question or comment?
Prof,
Go ahead.
my question is,
Your name
is it,
first. Your
my
name?
name is Austin Onyayala.
The first person, Evelyn.
Austin, the first name.
Okay, go ahead now, Mr. Austin.
As we have just listed the environmental sustainability reporting, can we have the format the format as to how to place all these factors that you have listed for us to use to in tabulating the illustration?
I'm giving you this. I'm sharing the slide. That's why I'm also going back to the illustrative case study. See, in sustainability reporting, just look at what we have here. When you say format now, do you know the first thing I gave you in that assignment? I say practice question. What was the first thing you saw there? Financial assumptions, right?
Okay. Yes,
Now,
so
when we now come to the sustainability reporting, see, environmental impact. So when you are preparing your sustainability reporting, it is expected, all these items you are seeing like number 1, 2, 3, 4. You have to make a comment, environmental impact, social responsibility, economic performance, governance. Are we there?
Yes, sir.
yes.
The aspect I've said for your own practice may be a no, is the graphical representation. And I've explained the reason that
Okay.
before you even talk of the graphical representation, you must have all the relevant data. How many years? Year 1, year 2. And once you have all those data, it's easy for those of us who are IT inclined, system accountants. You either use your spreadsheet as Excel or you use any other software that can help you. And I just mentioned one of such software, IDEA, capital IDEA. IDEA is the acronym for Interactive Data Extraction and Analysis, IDEA. With that one, it will tell you, do you want me to put it in form of pie chart, bar graph, histogram, and so on. And once you just click yes, in seconds, you will see this thing prepared. At this level, PhD, anyway, because of that's one advantage of this thing we are doing online like this. I'll be able to show us, because it's not at this level, this PhD. There's nothing wrong. But to me, this is not the time you go and carry a ruler and biro and be drawing one graph and be drawing. It should be technology. This era of digital information revolution. Now, once you just key in your data, just generate and get your result.
Prof, in
Go ahead.
continuation, where do we place the community, local community in the report?
See, let me share this. I'm going to share this. Look at this again. Environmental impact, social responsibility. See what we have under social responsibility. Partnership with local communities to provide renewable energy solution. And if you look at my question very well, this one has been stated even in that question.
Okay.
Yeah, it has been stated there that they will partner with the. So your is just to report. Okay, from the case study, this is my sustainability reporting, environmental impact. From that same case study, you'll be extracting the relevant one. Let me go back to the case study. Can you see all the percentages you even need? The expected or anticipated percentage, they are included. Huh?
Okay.
Anyway, what I will advise you, just settle down and go through first. It's when I will share this on the platform of the class. Then when you go through, you look at the illustration, then look at the practice question. And if you have any question, when next we meet, we will now address it.
Thank you. God bless you.
All right now. Have a wonderful evening. Enjoy the remaining part of your evening. In the absence of any other question.
Thank you very much, sir.
Thank you very much,
Prof.
Thank you.
God bless you.
Prof.
So I think please one important information. I would prefer this our class to be every Wednesday. I think yesterday I had a
It's better.
conference going on here in the US.
Okay, sir.
That's why I couldn't have it. So that we maintain consistency. If you remember, I think last week we had it on a Wednesday. So let's maintain Wednesday. But where necessity necessitates that we change the day. Most important thing is let's have that one contact in a week. And before you know it, another 3 or 4 weeks, we are done with the course outline so that you can invest your time in some other profitable venture.
Thank you, sir.
All right.
Thank you very much.
Thank you, sir.
Thank you,
Okay,
bro.
sir. Thank
Bye
you.
now.
Thank you.
Thank
Thank you,
you.
sir.
Have a good
Thank you.
day.
And you too.
Thank you, bro.
Good evening, sir.
Good evening, ma'am. Good evening, sir. Have a wonderful evening.
Good evening, sir.
Thank you, sir.
All right. Bye now.
Bye.
Bye. Good night.
Yeah, I'm going to